We welcome you to this video presentation of the Japan Metropolitan Fund Investment Corporation's JMF financial highlights for the August 2024 45th period. I would like to begin with an overview of JMF's growth strategy. JMF will continue to pursue higher total returns, or in other words, enhance DPU and NAV. The two main drivers for this are internal growth based on elevated cash flows from urban real estate, and in principle, the return of total gain on sales. Although not a goal in and of itself, external growth through new property acquisitions and M&As is also seen as one potential method to support expansion of growth cycle, such as accelerating and expanding internal growth, as well as the return of gain on sales. Similarly, JMF will apply proceeds from the sale of properties in the most appropriate manner, whether it be new property acquisitions or the repurchase of own investment unit, with a view to improving total returns. From an income return perspective, the method will depend on whether we are able to acquire properties above the implied cap rate. As far as capital return is concerned, the method will incorporate a comparison with higher NAV through the buyback under a NAV discount, and higher NAV through the increase in unrealized gains in the event property acquisitions after taking higher level of LTV because of the buyback. DPU for the 45th period was 2,306 yen, 2.5% higher than the 2,250 yen announced in April. DPU for the 46th period is forecast to come in at 2,080 yen, 22.7% above the figure announced in April. DPU for the 47th period is anticipated to reach 2,700 yen, 40 yen higher than the 2,660 yen initially disclosed at the time of the PO announcement. Although only a short time has passed since announcing details of the PO, this increase reflects higher rents at all assets, including urban retail properties. JMF has exercised the two main drivers of internal growth and returning gain on sales based on our asset management capabilities built up over our many years of experience in asset management. This has enabled us to broadly increase the level of DPU from the 2,200 yen level achieved through the previous period to the level of 2,700 yen, as I discussed previously. Moreover, NAV per unit rose to a historical high of 116 to 700 yen as of the end of the 45th period. This steady growth in DPU and NAV during the period under review, as I described a moment ago, led to an annualized total return for the 45th period of 6.88%. Next, I will explain our internal growth. As the main driver for JMF's expansion, internal growth has steadily progressed within today's inflationary environment. Urban retail properties tend to have relatively short tenant lease contract periods, where the remaining average contract duration is only 2.9 years. Meanwhile, 92% of contracts are fixed-term leases. This presents numerous opportunities to raise rents during the replacement of tenants and rate hike negotiations, and provides lessors with more bargaining power during lease negotiations. Moreover, we have introduced revenue-based rent for 59% of lease contracts, which has allowed us to establish a portfolio structure that benefits from inflationary impacts and that increases revenue-based rents. A relatively high proportion of JMF's offices are located in Osaka and other areas where there is a rent gap of 6% or more. We will continue to increase rents at the time of rent revision and tenant replacement. Turning now to residences, we have continued to acquire properties with a high potential for increasing rents using various acquisition methods. We successfully acquired 8 properties valued at 18.8 billion yen during the 45th period. The rate of rent increase for residential properties owned and managed for more than 2 years is 3.1%, so we will continue to raise total rent income and unit rent. Rent income has increased across all sectors, and total NOI has generally grown in line with the increase in total rent. Total portfolio rents from the 43rd period to the 47th period grew 10% to 3.4 billion yen, which, when annualized, comes to a growth rate of approximately 5%. Moreover, excluding the 4 properties involved in the current public offering, total rental NOI for the same period rose 7% to 1.8 billion yen, for an annualized growth rate of approximately 3.5%. JMF's portfolio is expected to see further upside going forward, where the upside we have accumulated at the present time alone will allow rents to increase by 1.123 billion yen annually. This increase is equivalent to an impact of approximately 86 yen per period when converted to DPU. Next, I would like to comment on return of gain on sales. As the other driver that supports DPU growth, JMF started asset replacement strategy worth 200 billion yen with the launch of JMF in 2021. These 200 billion yen in asset replacement activities has now entered its final stage. With an asset size of over 1.2 trillion yen, JMF will leverage its strength in property sales, aiming to acquire gain on sales gains that greatly exceed unrealized gains. JMF also plan to return the entire amount of any sales profits we gain in the future. In pursuit of increasing DPU, running parallel to ongoing asset replacement activities, we will also engage in new asset replacement activities in the future. As an example of a new asset replacement activity, announced in September, we disposed of Ito-Yokado Tsunashima. In this case, we applied a sales method that achieved a high sale price exceeding 75% of the appraisal value, and successfully generated a gain on sales of 4.6 billion yen, which can be used to increase DPU over several periods. In closing, I believe JMF has successfully elevated the growth stage to a new level during the 45th period. We therefore anticipate what we term the actual EPU, before amortization of goodwill and excluding gain on sales, to come in at 2,400 yen, and with the start of asset replacement activities intended to more aggressively capture gain on sales under the asset replacement strategy, the resulting level of DPU will rise to 2,700 yen. Founded on robust internal growth and returns of gain on sales as the main drivers, we will continue our aggressive fund management activities with the aim of maintaining and further enhancing DPU to the level of 2,700 yen. I therefore humbly request your continued support and assistance. Thank you.